Hello, everyone. I say hello rather than good evening because our audience has people from Asia, Europe, and North America. So good Wednesday evening or happy Thursday morning, depending on where you are. Welcome to this special presentation of Market Dynamics of East Asia, featuring members of our Asia Pacific CRE chapter. Thank you for joining us. I'm Noah Schlaze, CRE Emeritus. The Counselors of Real Estate, which brings you this presentation, is a distinguished solutions-focused consortium of accomplished advisors addressing real estate challenges worldwide. Experienced, innovative, principled, and credentialed problem solvers, counselors reside in 22 countries, practice in many more, and offer expertise in 60 real estate disciplines across all asset classes. Each has earned the prestigious CRE designation. I'd like to take a second to thank our sponsor, our sole sponsor, Equus Capital Partners. Thank you so much for your partnership. And before we begin, I'd like to offer you a free subscription to Real Estate Issues, the counselor's peer-reviewed professional journal, and home of the Jared Schlaze Prize. Named one of the top 10 essential real estate publications in the US, please visit this URL, cre.org/REI, to subscribe. In this first session of a series of Asia-Pacific webinars, we'll take you inside Japan and assess the real estate markets, economics, and political systems with a deep dive into the hospitality industry in this culturally rich country. The first hour of this session was pre-recorded last week due to time zone constraints, but we will have live Q&A at the end, and members are online now reviewing the program and getting ready. Many of the questions were pre-submitted through the link on the URL, and some of those answers are pre-recorded, and then we will jump back live to our questions. So now I'd like to introduce our video and today's moderator, Hiroyuki Isobe, CRE, a fellow with Japan Valuers Company Limited in Tokyo, Japan, and the founding chair of the Counselors of Real Estate's Asia Pacific chapter, now with 15 members and growing. Welcome, Hiroyuki-san.
It's 7 o'clock in the morning in Tokyo, and we are very happy to present you the first webinar from the Asian Pacific chapter. And as you know, the beginning of April is a season of full bloom of cherry blossoms in Japan, so it's beautiful. And I'm very glad to share the good season together with you. Could you start the recording session? Thank you for joining the first webinar hosted by the series Asian Pacific chapter. I'm Hiro Isobe, the chair of the APAC chapter. I have been a member of series since 1988. For many years, I didn't even think about establishing the chapter because of the limited number of the members in a region. However, we have seen a remarkable increase in the memberships in Asian countries, and have finally launched the chapter in 2023 with the great help and encouragement from many series leaders. This year, although our chapter is still small, we are planning to host the series of webinars to explore the Asian evolving real estate market. Today is the first webinar, and we focus on Japan. And due to the difference between, due to the time difference between US and Japan, the first 1 hour session is a pre-recorded, filmed in March 26 in Tokyo. Lastly, I'd like to express my sincere gratitude to Ms. Mariko Uchiyama, the Secretary General of the Japan Association of Real Estate Counselors. Without her support and coordination, this event didn't happen. Now, I would like to introduce 3 panelists. Number 1, Hideaki Suzuki. Second, Yasushi Kinoshita. Third, Takashi Kitamura. All of them are series located in Japan. And before starting or before asking each of the panelists, I'd like to say thank you very much for the sponsorship from several companies. Thank you very much again to the sponsors. Now, let me introduce Hideaki Suzuki. Can you start, Suzuki-san, first?
Yeah, sure. Happy to. Thank you very much, Isobe-san, for your kind introduction. Let me share my screen now. Okay, can you see my screen? Okay, thank you. Hi, everyone. My name is Hideaki Suzuki. I'm head of Business Development Services and Executive Director at Cushman Wakefield. I'm based in Tokyo, and my role is to analyze dynamics of the Japanese real estate market, as well as to provide clients with insights and consulting advice for their Japan investment strategy. Japan offers a mature environment for business and environment, which is characterized by several key factors: a large economy, $4.2 trillion of GDP, highly sophisticated regulatory framework, a great pool of talent, and political stability. Today, I'm very pleased for this opportunity to talk you through an overview of the Japanese real estate market. Okay, let's start. Let's take a look at the Japanese real estate market in a global context. The table on the left shows the top 25 most active cities around the world, which is ranked by investment volume. These top cities attracted and marked $324 billion of transaction volume combined. Among the top 25, there are 8 Asia-Pacific markets in the ranking, which is accounted for 92 billions, nearly 30% of the total volume here. From Japan, Tokyo and Chiba Prefecture are included in the ranking. Tokyo ranks second, following New York City with 28.4 billion that's been deployed. Tokyo marked 24.6 billion, and followed by the LA Metro with 24.2 billion. Tokyo and LA kind of have been competing for the second position in recent years. In 2023, LA was second and Tokyo was third, but in 2024, Tokyo took over the second place. Chiba Prefecture, which is a part of Greater Tokyo, also appears in the ranking, and that's largely due to Blackstone's acquisition of the AirTrunk data center portfolio with a high concentration in Chiba. The table in the middle shows the top 15 destinations for cross-border capital: Japan Industrial and Japan Hotel. Japan Industrial was the third most popular destination with 8.3 billion that's been invested. And Japan Hotel sector also very popular and one of the most highly sought after sectors, attracting 3.4 billion of global capital. Finally, the chart on the right illustrates the top listed REITs market globally. Following the United States and Australia, Japan has a third largest REIT market that offers a wide range of investment opportunities for equity investors. So in short, Japan is a popular destination because of rich investable stock and high liquidity, and that's been supported by the economic scalability. Right, next slide shows the real estate transaction volume locally in Japan, standalone. The transaction volume for overall Japan was $68.1 billion throughout 2024, which is 22% higher than the previous year. As you can see from here, real estate transaction volume has not really moderated even during and after the pandemic, but actually increased over time. What happened during the pandemic, COVID-19, is a number of Japanese corporates decided to offload their office assets, including their headquarter buildings, for capital recycling so that they could focus on their main business, which created a great amount of investment opportunities in office space for investors. Also, as you know, e-commerce was boosted because the pandemic and work from home trend came. Logistics and multifamily assets became so popular among investors too. Then the advent of OpenAI hit in 2022 and GPT-4 came in 2023, which of course made data center assets even more attractive to investors. In terms of sectors, transaction volume have increased across various sectors, particularly in industrial. That includes, as I said, data center industrial and hotel multifamily. And these sectors are now accounted for over 50% of overall transaction in 2024. Right, next slide is cap rate. What you see on the screen here shows cap rates, current cap rates, and the range of historical cap rates for prime office in key global cities over time. Hong Kong has the lowest cap rate at 2.8%, and followed by Tokyo in Japan at 3.0%. And Tokyo behaved differently from other global peers. Tokyo's cap rate has remained stable and actually lower than pre-COVID level. That's because of Japan's low interest rate environment. Right, let's talk about environment for low interest rate environment for Japan. So this slide illustrates the evolution of our interest rate policy by the government and by the BOJ, Bank of Japan. That's a central bank for us. The Bank of Japan didn't really increase the rates, while other central banks around the world did increase. But why BOJ didn't increase? That's because of concerns over low economic growth and deflation. The Japanese economy has been plagued by low growth and deflation for many, many years. Raising interest rates can reduce consumer and investment appetite and may have a negative impact on the overall economy. Also, there's a significant concern over potential impact on small and mid-sized enterprises, SMEs. SMEs in Japan contribute to about 50% of the total GDP. Additionally, they make up 99% of all businesses in Japan and provide around 70% of employment. These small and mid-sized enterprises also highly dependent on low-cost borrowings, and any drastic change can impact on those companies. So BOJ has been very, very cautious for any change that they make. Recently, the BOJ decided to gradually normalize the rates and backed by continued corporate profitability, inflation, and wage growth. In February 2025, this year, the short-term interest rate is 50 basis points, and the long-term rate is 140 basis points. The latest number I saw this morning is actually over 150 basis points for long-term rate. However, Japan's rates still remain lower than global peers. For example, if you see a rate differential between the United States and Japan, that exceeded 300 basis points in December 2024. Now with the latest number is at 270 basis points. Unlike other global markets, Japan is one of few markets that maintain low interest rate environment for business and for investors. So real estate investors generally feeling comfortable being borrowers in this market. I think that's very different from your market. Right, now let's talk about currency. That rate differential we just seen in the previous slides has led Japanese yen to a historical low level, especially against US dollars. In January 2020, and pre-COVID, the exchange rate was 108 yen per dollar, but has a significant weakened to 151 yen in February 2025. When you look at the pre-Abenomics level, in January 2012, it was actually 76 yen too, meaning since pre-Abenomics, the yen value has nearly halved. And of course, this weaker currency has attracted more international tourists, with a record high number arriving in 2024. Aiding the fast recovery of the hotel industry post-pandemic. For international investors for real estate, of course, this period is ideal for increasing their exposure to Japanese markets, and known as currency vintage year. Right, I also would like to touch on base with the office performance in Japan, because it's so different from what you see in the United States. In Japan, office hasn't died, but actually continues to thrive. What you see on the screen here is a rent and vacancy for grade A offices in Tokyo Central Fibers and Pipelines. Before the pandemic, the vacancy rate for grade A office in Tokyo CBD area was below 1% level, which moved up to 4.9% in 2023. The impact of the pandemic was significant as it forced tenants to rethink their workplace. However, luckily, there was also limited amount of new supply in 2021 and 22, which mitigated the impact of the COVID. That vacancy rate still move up, but stop at a below 5% level. But now it's down to 2.3%. That's very low and expected to continue at this low rate despite a planned supply coming in. But why so strong office demand? Well, because people now back to office and creating an attractive workplace for with better amenities has become such a critical factor for Japanese corporates so that they can attract and retain talents. Plus, Japan's population is, the Tokyo's population is actually still growing too. Actually, there are a lot of things happening in the sector, but I will stop here just being conscious of time. Right, this is my last slide. Key takeaways. Japan's premier destination for international capital due to rich investable stock and high liquidity, and that's been supported by its fourth largest economy, highly developed regulatory framework and political stability. Japan transaction volumes remains robust and mark its historic peak in 2024. Industrial sector, including logistics and data center, along with hotel and multifamily properties, accounted for over 50% of the overall transactions in 2024. Cap rates remain tight and actually lower than pre-COVID level, largely supported by low interest rate environment in Japan. Recent increases in both short-term and long-term interest rate have not significantly changed the lending condition for real estate investors, with which investors still remain comfortable as borrowers in this market. That rate differential with global peers has led to a weaker yen and reaching one of the historical low levels. This attracts foreign investors seeking greater exposure to Japanese market and of course benefiting from this favorable market condition, and this is known as a currency vintage for them. The weaker yen has also resulted in a surge in the international tourism, aiding the hotel industry's recovery from the pandemic impact. And the last but not least, the office sector in Tokyo thrives with a high occupancy rates, and rates are still expected to further grow despite an increase in new supply coming in here. Thank you so much for listening, and this is all from my presentation.
Thank you, Hideaki. We've been able to learn a lot about the overview of the strong real estate market in Japan. Our next panelist is Yasushi Kinoshita, and based on the explanation from the Hideaki, many of the audiences may feel that it may be a good idea to make an investment into Japanese real estate because the market in Japan is very strong. And Yasushi now is going to introduce about how financial market is composed of in Japan and what is the legal system in Japan. Can you start, Yasushi-san, please?
Thank you very much for your kind introduction. Hi, everyone. I'm Yasushi Kinoshita, co-chair of CRE Asian chapter. I'm a founder and representative member of a boutique investment management company called Eminence Partners, and I have provided investment structuring, finance arrangement, and property-level asset management to foreign institutional investors investing in Japan, Japanese real estate-related products. Thank you for joining Asian Chapter's first webinar. I'm delighted to be with you today to discuss Japan's legal and finance system, a critical component of understanding Japanese market. In the next 15 minutes, we'll cover key aspects, including legal rights, the registration system, important transaction considerations, and financing structures. My goal is to provide you with a practical overview for your real estate endeavors to Japan. So just a reminder, as a lawyer, before we start, please note that this presentation is for information purpose only. And in case you consider a real investment opportunity, please consult with a legal counsel or tax counsel in Japan. Okay, so let me start with the first slide. So I'm going to talk about like a real estate legal system in Japan. A fundamental aspect of Japanese property law is that land and buildings are separate legal objects. This requires separate registration for each and creating unique ownership structure. Real estate rights are registered in the real estate registry called Fudosan Toki in Japanese at the Legal Affairs Bureau operated by Department of Justice. The registration system covers 9 legal rights, including real estate related ones. The major ownership types are fee simple, strata ownership, and tenancy in common. Key leasehold rights are superficies and leasehold. Importantly, there are no major restrictions on foreign ownership in Japan. The real estate registry is a computerized national system. Computerization began in 1988 and largely completed by 2008. Resident and family registers are separate system for privacy. The system uses a unique land parcel identifier called Chiban in Japanese. The registration documents are controlled by this Chiban ID. You can easily identify ownership history and rights on a certain parcel and building on it, using this Chiban ID as a reference. Therefore, there is no need to have a title insurance company to track down the ownership history. The registry has 2 main divisions. The first one is the title division, called Hyodaibu in Japanese, that covers physical attributes. The second one is the right division, called Kenribu, that records legal rights associated with the parcel and building. So next slide. Registration is crucial for asserting property rights against third parties. Without registration, your rights can be subordinated to a bona fide third party. Therefore, simultaneous registration of conveyance upon purchase price payment is a standard procedure to protect your rights in Japan. Having said that, the registration doesn't give absolute protection. As a part of computerization of real estate registry, a 2005 amendment modernized the system. Online registration was introduced, and physical title deeds were abolished and replaced by a 12-character password system. And cadastral maps called kozu in Japanese are also maintained in the registration system, but have limitations. They don't conclusively determine boundaries, and they may be inaccurate due to the age. So let me talk about the boundary issues and building codes in the next slide. The boundary confirmation is obviously important to prevent dispute with your neighbors. And this is also the case in Japan. A boundary confirmation memoranda called Kyokai Kakunisho in Japanese is often required for institutional property acquisitions. It is signed by adjacent landowners and also based on the surveyor's determination. Boundary agreements are also used when structures encroach on boundaries. The Hikkai Tokute, a bit difficult to pronounce, system are newly created alternative dispute resolution mechanism, provides an administrative way to resolve boundary disputes. The Legal Affairs Bureau helps determine boundaries. It's faster and cheaper than the court. And then let me talk about building code compliance. The building code compliance is verified by specific documentations. The certificate of inspection, called Kensa Zumisho in Japanese, and building construction confirmation application, called Kenchiku Kakunin Shinseisho in Japanese, are key. The local governments or designated agency issue these certificates. A certificate of issuance, called Kofu Shoumeisho in Japanese, may be obtained if the original is lost. However, this certificate of issuance may not be issued at any time because there exists durational limit in keeping the original application at local government offices. Without this documentation, it is very hard to prove compliance at the time of construction completion. And institutional investors are reluctant to acquire property without the proper documentation. Then let me talk about transaction procedure and taxes. Japan's closing process is unique due to the lack of an escrow system. It relies on in-person meetings and direct fund transfers. Commercial banks are often used for closing because it is easy to confirm the fund receipt, and often banks are involved in the transaction as a lender. And the funny story is closing often occurs in the morning because Japanese bank branches close at 3 o'clock in the afternoon. And the single judicial scrivener called Shihoshoshi in Japanese typically handles all registration applications, even multiple parties involved in the transaction. And let me talk about taxes, which everybody don't like. In general, Japanese tax related to real estate transfer is not cheap. Therefore, tax advice is essential for large-scale transactions. Stamp duty is levied on the sales and purchase agreement, varying by contract price. Registration tax, 2% of property tax assessment value, is paid during the registration process. Real estate acquisition tax, 3 or 4% of tax assessment value, depending on the character of the property, is levied on buyers, typically several months after the completion of conveyance. So let me talk about tenant leases. Japan has two types of tenant leases. The first one is called orderly leases, 普通借家契約 in Japanese. That favors tenant quite much. Landlords have strict eviction restrictions. The mere maturity of lease is not sufficient to evict tenants. Landlord needs to prove justifiable reason, which is defined very narrowly. Because of this, leases effectively continue indefinitely if tenants pay market rent. The second one is fixed-term lease, called Teiki Shakuya Keiyaku in Japanese, that were introduced in 2000, relatively new, to promote higher quality development. They expire automatically without requiring justifiable reasons, and in general, they can be non-cancelable with fixed rent. Although fixed-term leases were intended for rental residential properties at the beginning, now they are more common in commercial properties such as office, retail, and hotel. Let me skip the financial slide and let me talk about I'm sorry. Let me skip the investment structure. And first, I'd like to talk about real estate financing market. Japan's real estate loan market has two major categories: corporate loan style CRE loans and non-recourse lending. Corporate loans are traditional, made to operating companies that own real estate. Those loans are full recourse, meaning the lender can pursue the borrower's overall credit worthiness. They often involve cross-collateralization, where multiple assets secure a single loan or facility. Japanese institutions emphasize long-term relationship in this lending style. Terms are typically 5 to 10 years with varied amortization. Loan to value is relatively high and sometimes reaches almost 100%. This structure offers flexibility, but please note that expose the borrower's entire financial position to real estate risk. The second one is non-recourse lending, using special purpose entity to isolate the risks. The lender's recourse is limited to the property itself. The sponsor provides limited assurance. Non-recourse loan market in Japan started around 2000, with foreign securitization lenders coming into Japanese market, such as Goldman Sachs, Morgan Stanley, Lehman Brothers then existed, but shifted after the global financial crisis, with securitization lenders withdrawing from Japanese market. Now, CMBS market is not in existence in Japan, and non-recourse financing is mainly through whole loans from domestic banks and specialized lenders such as life insurance companies. Underwriting is more conservative with lower loan-to-value ratio, typically up to 60 to 65%. Terms are typically 5 years with 1 or 2 year extension option. And amortization varies depending on the characteristic of the transaction. So let me get back to the tax conduit structure slide. So for institutional investors using non-recourse loan for their investment in Japan, tax conduit structure crucial. There are 3 structures typically used. The first one is GK, TK structures using Tokumei Kumiai, a silent partnership under Japanese commercial code for flexible investment and profit distribution. It's tax efficient for foreign investors, but please note that TK investors have limited operational involvement. Basically, TK investors have only veto right. The second one is the TMK structure, Tokutei Mokuteki Kaisha in Japanese, from the asset liquidation law, also provides quasi-tax conduit effect. It offers limited liability and asset segregation, but it requires high establishment cost, so it is for large-scale investment. The third one is REIT. The REIT structure is for collective investment, aggregating assets into funds. So they are regulated under the Investment Trust and Investment Corporation Act. Regulations are the most stringent because REIT structure is designed for mainly retail investors. So this is the end of my presentation today. Given the constraint of this webinar's 15 minutes time frame, I have to concentrate on the key points, which may have led to some areas lacking clarity. Nonetheless, I hope this presentation has served to stimulate your interest in Japanese market. More comprehensive details are provided in the presentation slides, which I encourage you to read. Thank you for your attention.
Thank you, Yasushi. All of you saw and heard the many technical terms in Japanese. It may have been confused, but luckily we do have very excellent AI systems everywhere. So the difficulty of the language issue is now getting smaller and smaller. And in addition, there are many professionals helping global investors, including Yasushi and Masaki. So please do not worry about the languages and different legal and financial systems in Japan. Now let me introduce Takashi Kitamura. He is one of the most well-known specialists in hospitality and hotel industries in Japan. And because hospitality business, hotel business, tourism is one of the most growing criteria in real estate business in Japan, I am very looking forward to his presentation. Takashi-san, please.
Thank you. Audio. Thank you. Thank you very much. Nice to meet you. My name is Takeshi Kitamura. I'm CEO of Japan Hotel Operator. Our company launched from the 2006. So it means since then, we are looking to this market for more than 19 years, especially specializing in Japan. Mr. Isobe-san mentioned like the language problem, but for me, there's a huge language problem right now. So please, everybody translate my bad English to good one. Okay, let me try in English. Thank you very much. The first, I would like to introduce overview of hotel market in Japan. The first slide is like this. Sorry. Okay. This is the inbound market, also including the domestic market, the hotel market in Japan. Since 2015, there is a sharp increase from the inbounds. The market getting bigger and bigger because of this year. Tokyo Olympic decided before this year, so many inbound market come to. We welcome to the big market right now, and in 2019, there is more than 31 million inbound market come. Now, last year from January to December, we welcome to the more than 36 million inbound market. It's going to be the increase of approximately the 15.6% compared to the 2019. Now, this big market affecting the Japanese hotel, also the ryokans inn included, affecting the big time this since this big booming. And for future, there's so many events waiting this year. The Osaka Banpaku Expo, and then IR, Integrated Resort Building start, and also linear motorcars project gone. And then so many projects moving forward, like the new Shinkansen line in Hokkaido or the other market too. So we believe this year, this breaking record 36 million, I think this year, 2025, reached to the 40 million, I guess. Next is the portfolio from the inbound market. Normally, so many Chinese people come, and here, this year is a little bit slightly different. Chinese market slightly shrink, but South Korea market getting bigger, and also Taiwan and Hong Kong, East Asia, from East Asia and the Southeast Asia inbound market getting bigger and bigger. That's really good for the Japanese tourist market. This really sharp increase of the inbound market is just 5 years since the Japanese market is a really pretty domestic market. So we doesn't prepare yet actually. Now we are preparing for the inbound market, and so so many pipeline of new hotel. Also the preparing in whole market, not only Tokyo, but also the other regional market too. Next slide. Here is the general market of Japan. It is interesting that a long time ago, the gateway to the Japanese hotel market is normally the Narita Airport or Haneda, and some of the Kansai Airport, Osaka. But right now, so many gateway is open and very working pretty well. And the new Chitose Airport, it is in Hokkaido. This is 23 million people is coming. We welcome. And also Narita Airport and the Haneda Airport is working pretty good. And also in Osaka, Kansai Airport and the Itami Airport. There is a 3 airport in Kansai and also Kobe Airport. Then Fukuoka Airport is in Kyushu. This is the airport getting bigger and bigger. So they are preparing the welcoming so many inbound market too. And the Okinawa Airport. This is big airport, really easy to come from the Asia because near from the East Asia or South Asia. So actually, in Japan, there's a 47 prefecture. Each prefecture has own airport. That is working right now. And moreover, in Japan, domestic market, actually, I mean the Japanese domestic market, staying one destination, then go home. But for the inbound market, there are different activities they are looking for, comparing the Japanese tourist. Inbound market stay in one place, and they are using more than week, and they use the tourist route, and they expect many experience for different prefecture from different prefectures. Most famous route is the from Tokyo to Osaka. This is we call the golden route. This is long time walking, but right now so many routes here. This red line showing that route. Then in Hokkaido, there's a Hokkaido route here, and also the golden route is working now, still working. Then also from Nagoya to the upper side of the central Tokyo, Nagoya, this route is working too. Then from Osaka to the east, west Japan, this is new tourist route is working. And also Shikoku here, can you see the point? Shikoku, there's a own route cycling route they have. And also in Kyushu, from Fukuoka to Beppu, here is very famous of the onsen, hot spring zone. Then go to the Kumamoto, then back to the Fukuoka. And the market, other market is, Okinawa. Okinawa, there is so many island there. So the people having the very fun traveling this island, between islands. So like you see, in Japan, using the Shinkansen and also the so many gateway and the culture or the particular food for the particular prefecture is all different. So the now inbound market is the traveling more than 1 week. It's affecting the Japanese tourist industry big time this since the 3 years after 2023, after COVID. Yeah, here's our interesting the Japanese particular way to having fun using the tourist package tour. The next one is the okay. So sorry. Next one is the cap rate. Actually, we are questionnaire survey using the asking our client actually, and we check the cap rate. The upper one is the operation-based cap rate. It means not leased, not rent basis. This is just owner own and the owner manage, and they have the brand too, like Imperial Hotel. The other bottom one is rent basis cap rate. This is the capex deducted after capex deducted. So it means net cash flow basis cap rate. The both is the same. And as you see, after Lehman shock, there's a really sharp increase of the cap rate. The blue line is average. The investors and the lenders, the other consultant, they are all our client. And as you see, the average ratio is getting higher after Lehman shock. This is a really huge one. Then stabilize right now. This year, now we are trying to research again, but not the summaries coming up yet. So last year, 2024, May research, the summary is here. I would like to introduce the average of the rent-based cap rate, which is like I mentioned, net cash flow basis. It's count here, 4.5. That almost not only Tokyo, but the other regional market too. 4.5 is the almost average. If you think NOI basis cap rate, maybe the around 4. And the above one, this is not rent basis. This is the owner basis, just like a business value. It's a slightly the above comparing the rent basis cap rate, 4.7. Yeah. Then I think the for future, almost the cap rate is the almost stabilized, I guess. Next one is I would like to share for each market destinations cap rate. The luxury, city hotel, upper business. Actually, in Japan, we don't use the language of the budget hotel. We use the business hotel, but it means the almost the same with budget hotel. The upper budget hotel and the budget hotel, city hotel. City hotel including the big banquet, and luxury hotel. The above upper one is the operation basis. The here down below one is rent basis. Okay, this is a last year questionnaire survey summary. So next slide is the almost 2 more pages. This is regarding the management. Now, in Japan, everybody, including us, trying to the first step is make Japanese tourist market more healthy market. First, we think about the tourist market. But right now, after tourist market is done, because there's so many routes and so many gateway is working right now, including the like the airport. But now the big phase is the changing the tourist market to the tourist industry market. That's the really difficult and important. The tourist market is the we see inbound market needs and the supply or pipelines. But now we have to think about that's the market change to the industry. That's the Japanese most facing difficulties right now. Here is some the example of the difficulties right now. Now, most important thing is the labor cost. Really, labor cost is increased pretty big time, and also the labor shortage is we are facing that problem too. And also a big problem is the building cost. Building cost is the next pages, but yeah, I would like to mention here. A long time ago, building cost is like the 200,000 yen per 3.3 square meter. It means Japanese way to say tsubo. But right now it's terrible. More than 2 million yen per tsubo, 3.3 million square meter, not million square meters. It's terrible. So if you think about the building a new hotel and looking at the feasibility or pro forma or projection, it's really tough to create the feasibility studies because the building cost is pretty high. Energy cost pretty high, and the labor pretty high. There's so many tough things we have to care about. But the facility is here. It's just like I mentioned, the rental contract is here. Yes, yes, this is just sample. But I would like to say is there's so many difficulties, but fundamental is pretty strong. So inbound market getting here, it's really nice for us. We welcome, and we are dealing with these difficulties, but we have the good fundamental. And now, what we are doing is that so many DMOs government built up. In Japan, more than 300 DMOs inside Japan, they find the contents, find the destinations, and they make the market understood to the inbound market. They are trying to promote. That's really good activities. And also the next pages. Oh, here's the other things that I would like to. And in Japan, okay. In Japan, there's a 10,000 hotel, also the 35,000 ryokans. The total is around 45,000 facilities inside. And especially ryokans in, it's Japanese style hotel is the hot spring zone. So it means they are located in the top mounts normally. Resort hotel. But Japanese way, we call it ryokans in. And the hotel is more than 10,000. So actually, there are so many facilities here, but the pipeline of hotel is getting bigger and bigger. So it's very tough to get the profitable GOPs right now. Here is the sample 1, 2, 3, 4, 5, 6. 6 point here. With regard to profit margin by department, blah, blah, it says, but the normally in Japan, GOP ratio, gross operating profit is around 30. The other country may be more, but in Japan, like the high cost of the operating expenses lead to the low GOP ratio. But now they are trying to getting higher and higher, comparing the 30% of GOPs. That's right now. The way to do it, maybe the next time I would like to introduce. And the next page is the actually last one. This is almost conclusion and general comment. Now it is expected that the inbound market is very strong, and I would like to say the one more important thing. Comparing the other countries' hotel market, in Japan, there is a distinct four season. Actually, the summer, winter, October, no, autumn and the spring. Each distinct season is affecting or impact to the hotel market very greatly for the each region and each monthly they are affecting. So we have to be very careful about the check the seasonalities. And also in Japan, domestic market pretty big, not only inbound market. Actually, the Japanese people own the passport only 17%, only 17. Normally, they more than 50% the people own the passport go abroad, but in Japan, Japanese people only 7%. It means Japanese people go inside Japan. So we're dealing with the inbound market. Also, we're dealing with the domestic market double. So to do it, actually, this is last comment. In Japanese domestic market, the people move only the holiday season, right? And or the good seasonalities, but it means the very fluctuation or the volatile of the occupancy ratio we are suffering. But after inbound market, it's changed the market completely. They come 12 months, they doesn't care, especially Hokkaido, very great snow, or but the other regional, the snow season not good. Or the Japanese people move only this Saturday, but the inbound market come to the weekday too. So it is to fluctuation of the weekly and monthly too. So good thing of the inbound market is obvious, but we have to care about the over tourism or the tourism pollution too. Only 5 years, so many inbound market, yeah, increased very sharply. So right now we are trying to make the region understood. This segment of the hotel or tourism is really important. Now they understand. Then now we are trying to the market to the industry. That's the Japanese status right now. If there is any question, please ask me as much as possible. I would like to answer. Thank you very much.
Thank you, Takeshi-san. And thank you all, three of you. Thank you very much. We are kind of running out of time, but we have a special participant from Chicago or Maine in the United States, although it's very late at night in the state.
It's
No,
okay.
no,
Combat that.
no. If you have any,
I have a few questions
Yeah.
for our audience. We asked for questions by email because part of this session is recorded and part is later. But I have a few that came in and they match very much what we have seen here. So let's just get started with the first one, which I think is probably best for Kitamura-san.
Okay.
What is the impact of all of the unrest in the United States right now? Because we are a little confused about basically everything right now. Are you seeing an effect on it, on the hotel sector, on occupancy and on American appetite for investment, for example?
Okay, thank you very much. I think sorry, Isobe-san, mute, please. Isobe-san, mute, please. Thank you very much. In Japan, the inbound market, the biggest one is the East Asia, especially South Korea, and now the Chinese market are getting back. And also this Southeast is big market too. So now in Japan, dealing with this market, especially the big population market is just adjacent to the Japan. So we are looking for it. And also the main investor is from the Southeast or the East Asia too. So actually like the question, the American situation doesn't affect yet, but for future, the American market is really important. Comparing the Europe, American market is more bigger. So we are a little bit care about for future. But the investment parts, the most investment eager investor is from the Asia market. So the cap rate or the investment capital market, I don't think so. Doesn't impact so much, but the tourist market probably impact a little bit slightly. Is that the?
Arigato gozaimasu.
Thank you. ありがとうございます。
The second question, I think, is probably for Kinoshita-san. How long does it take for a foreign investor to establish trust working in Japan, working in East Asia? And a foreign consultant or appraiser who wants to practice in Japan? You already talked about the lack of legal constraints, but what about social constraints?
My short answer is they've already established the trust in the market. And foreign institutional investors, particularly from the United States, have been increasingly active in Japan, starting with a travel loan working out in late 90s. And that started around 1998. And over time, many of these investors have established local presence here. And their senior management teams being localized. So you see a lot of Japanese nationals leading the team on the ground. So moreover, the introduction of new investment due diligence and also like underwriting methodology, such as discount cash flow method, have significant impact to modernize Japanese real estate market. So foreign investors have played a substantial role in this market already. And the foreign players influence, evolve this market and get to the really sophisticated level. So to quantify this, a survey by SMTB Research Institute indicates the global investment funds hold assets in Japan totaling 4 trillion yen as of December 2024. Representing 17% of the total asset size of J-REIT, which is really significant size. So again, my answer is yes, already established. So don't be hesitated to come to Japan.
I've always enjoyed coming to Japan. I think the next question should probably go to Suzuki-san, which
Happy
has
to.
with historically the railroads have played a big role in hotel and retail development. Is that still true? And is that still a major player? By the way, you are on mute. Oh, you're still on mute, Suzuki.
Can you hear me
there-
okay? Okay, good.
Yes.
Thank you. Thanks for the question. Yes, they do matter in this market still. So the railway company, they play really pivotal role in the Japanese market, not only for retail and office, but not retail and hotel, but also hotel markets. Sorry, not retail and hotel, but also office market as well. So any like mixed use usage for any real estate sectors, the location really matters. The proximity to station really matters as well. So in that sense, the railway company and the station location really has a significant meaning when you choose your assets. You have to choose the right location. And when you actually visit Tokyo, you will notice actually kind of like a 45 to 1 hour traveling time that you can get to everywhere in Greater Tokyo, right? So the connectivity is really, really great. In other words, that having really right access to the connectivity is also important too. Hope I answered your question, Nelson.
I think you have. And the next one is the last of the questions I got by email, but I should note that I got it from 3 different people. So I think we should probably look at it. Which is, our members are also interested in whether Asian investors are interested in investing in the US right now versus Asia. And are there particular property classes they're interested in? Are there allocations marked for United States investment? And this question is for everybody.
Maybe I will go first, if I may. So I've been talking to my clients who are real estate or Japanese outbound capital investors who are interested in going overseas, of course. one of the markets they frequently mention are actually mainly two markets. One is the United States and the other one is Australia. Then there's actually lots of similarity in the investment strategy in these two markets by the Japanese outbound capital. They really interested in multifamily and logistics sector and plus data center probably. For multifamily, if you see the real estate holdings by Japanese J-REITs, actually in terms of the number, the half of the asset holdings by J-REITs are actually multifamily. So multifamily is very, very kind of established and mature real estate sector to Japanese. So it's very natural for Japanese to think about investing multifamily in other countries as well. Then, the multifamily market in United States is really great as well too. And same as in Australia, the multifamily market is growing in Australia too. And the other thing is logistics, of course, because of all this happening right now. So people have really become really big fan of logistics sector as well. Then plus data center, all the discussion of the AI, open AI, all the government initiative going into the data center, encouraging them to establish more and more in United States, actually. So yeah, I think definitely Japanese real estate investors are interested in coming into US market.
Sushi, I saw you
Yeah.
on mute.
Okay. Yeah. If I can add some comments, there are two kinds of players interested in investing into US. The first one is financial players like institutional investors pension fund and government pension fund, life insurance company, quasi-government banks. They've already invested a lot through the money managers like Blackstone's, BlackRock's, KKR. So they are big LPs for those big money managers already. And they're not very high profile. They try to keep low profile. So probably you may not know, but a lot of Japanese institutional money is already in US real estate market. Another player is developers. Developers are now struggling in domestic market because of the expensive construction costs and also the population reduction. We are aging. So obviously the demand for new building is going down for a long time. So those developers are targeting mainly, well, actually, financial players are looking into two major markets. One is Eurozone, another one's US market. But the developer has other perspective on top of those two markets. They are looking into South Asian markets because those markets are population-wise growing. So many residential developers now stepping into Asian countries such as Vietnam, China, and Malaysia, Indonesia. So they are really active player in those markets. So those are the two major players looking into the investment outside the country. And obviously for both, US is a big, big market.
And Kitamura-san, do you have
Okay.
anything to add?
Thank you very much. I have the, I think that there's a 2 point from the hotel segment. In Japan, there's so many, almost 90% is domestic hotel chains. They need brands. For example, the APA hotel in Japan, we call it the APA hotel. They bought the hotel chain in Canada long time ago because they want brands. In Japan, Japanese hotel are really tough to make brand comparing the hotel chain, the Marriott, Hilton, Marriott. We are not good at all. I'm sorry for Japanese people. But so the first one, hotel chain want to buy the hotel operators itself, the first. The second is the ease of the currency by diversity. How do you say diversity violation? Now the Japanese currency is very weak, but for future it's changed. We have to prepare for that. Not only inside Japan, but we have to invest broaden and ease that kind of the risk of the currency movement. So maybe so many investment companies they're looking not only Japan but the portfolio of the destination. That's important thing. So next market, I think. Yes.
And we are back live. The question and answer portion of this webcast is now open, so please post your questions with the Q&A feature that's at the bottom of your screen. We also have some more questions that came in by email, and we may address those as well. The first question that came in is probably the only one that I can answer, which is to say that the full recording of this session will be made available via YouTube with translations into English and any of the other languages that YouTube handles. Likewise, all of the PowerPoints that were included in our presentation are available today. So I don't see any live open questions in the Q&A, so I will go to the first one that came in by email, which is this one here. With the current population of Japan at 120 million, it's falling fast in Japan and predicted to drop to 95 million in 2050. And the proportion of people 65 and older is going to go from the current 30%, which is already very high, to 40% in 2050. With a declining population and the world's fastest aging society, what do you think will happen to Japan's real estate market in the long term? Panelists?
That's a good question. That's a very good question. So let me talk about that. Obviously, within 5 to 10 years, we are not that much concerned because still we are active. However, the Japanese real estate market is set to undergo a fundamental transformation, as pointed out by this nation's declining and aging population in the long run. The demographic shift will fundamentally reshape the demand and investment patterns. We can probably anticipate overall decrease in demand for traditional real estate assets, such as multifamily, office space, and retail, particularly in local cities, which has accelerated the population. Simultaneously, the increasing population of elderly will fuel a demand for specialized asset classes, such as healthcare facilities and senior housing. And that may prompt a shift towards smaller, more accessible housing units, rather big ones. So demographic pressure is also likely to increase the concentration in the bigger cities like a Tokyo metro area, like Osaka and Nagoya. And probably the local cities will lose more populations. So the real estate investment strategy will need to adapt with investors potentially moving away from conventional assets and towards sectors catering to the elder generations. And also greater emphasis on the long-term planning and resilience in the face of these demographic shifts, particularly in like a concentration into big cities. That's my perspective.
You are mute, no?
We have a couple more questions that have come in from that channel. Thank you.
No.
Yeah, can you go ahead?
Yeah, getting into another question. I would like to add one thing about the first question. But I would like to say that although we are going to face the reduction of population and the aging. But on the other hand, we are going to have the increase of foreign workers, immigrants, and according to the projection by the government, we are going to have more than 10% of the population by the foreign residents in about 50 years from now. And I think that those kind of new segment of the people in Japan is going to add a new segment in real estate market. And so I just would like to ask maybe Kinoshita-san, do you think that the new amount to Japan, I mean a foreign resident, is going to have some impact on the real estate market in Japan?
Thank you for the good point. Pointing out the good point. I do hope the government forecast will be realized, like 10% increase in the long run, and that will support the Japanese economy. Having said that, I'm a bit skeptical that much of the sharp increase in the immigration due to the cultural issue, particularly Japan's been in a homogeneous society for long time, and still have difficulty in accepting immigration. And I hope that much of increase will be happening. And however, mainly that is impacting in residential area. So obviously we have 8 million vacant house already now. So in Japan entirely. So those people can be absorbed in the vacant residential properties. So I don't think there's a significant market change derived from such an increase in the immigration. That's my answer.
Another challenge you can add to that is that one of the primary reasons for somebody to immigrate and work in a foreign country is to send money back home to their family. And with the current weakness in the yen, it's hard to send a lot of money back home because your yen does not buy as much in other countries as it does in Japan. And I understand this is already suppressing immigration employment. Let's jump to the next question. If I can figure this out, here we go. Which is that interest rates in Japan are also expected to rise in the near future. But what I'm reading is that the impact of rising interest rates on the market won't be as big as it is in the United States. Is that because loan to value ratios are lower than the United States, or loans are longer, or what would drive that?
I think there are three factors for the difference. The first one is obviously the U.S. Interest rate spike was very sharp. It's probably reaching to 500 basis point spike, but instead, Japanese Japanese government bond increase, long-term interest rate increase, still less than 200 basis point. So the impact is far less in Japanese market. That's one. And another one is that the underwriting methodology, because DCF, when you employ discount cash flow method, the increase of the no-risk long bond interest rate has a significant impact on your valuation. However, still Japanese real estate investors are influenced by like a per pound, like a per area pricing methodology using like comparables. So that mitigates like an impact of the interest rate increase. That's the second one. The third one is, well, I'm talking about office market because US office market significantly damaged by the increase of interest rate. And that is not the only reason, because another reason is that the increase of the vacancy. As pointed out in a presentation, Central Tokyo's vacancy for Class A office is 2%. So the office is occupied like 98% in central Tokyo. So that mitigates like a price decline. And even like our presenter indicated like a tightening of cap rate. So those are the three major reasons, the differences between US and Japan regarding like interest rate increase.
Okay, we've got a couple more, and then we should probably let people go to breakfast or dinner, depending on where they are. Interest rates seem to be a popular topic. Let's assume this questioner is a foreign investor purchasing property in Japan for the first time. Will they be able to take advantage of Japan's low interest rates, or will they be financing elsewhere?
Unfortunately, my answer is not quite. Securing financing from local Japanese institutions can be challenging for foreign investor, particularly first comer, because this is largely due to the Japanese bank's emphasis on long-term relationship in lending. So that will give like obviously advantage over, the established client get advantage over newcomers. That's one. And also linguistic and communication barriers can be a hurdle. If you are a big institutional investor, you may be able to get like a special treatment from a business unit specialized in foreign investor and communicate efficiently in English. But if you knock the door of the local bank branches, that wouldn't be happening. So if you're fluent, like Nor, in Japanese, you may be able to get like a discussion with the local branch officers, but if not, it's a really challenging. So my suggestion is that you should talk to the, investment, foreign investment banking related wealth management service, like Goldman Sachs or Morgan Stanley. They offer some sort of a wealth management services, and they may have operation in Japan. So that would be probably the easiest way to get like even still you can get the financing in yen denominated, so that can provide you like a low interest rate benefit. So yeah, talking to the local Japanese banks will be a bit challenging. So talk to the foreign investment banks. That's my advice.
So fluent, mara desu. Demo, ima. Last question is for Kitamura-san, I think.
Yeah.
Which is that we've heard that there's been big foreign investments in snow ski resorts such as Niseko in Hokkaido or Hakuba in Nagano. The majority of foreign investors are, it seems, Australian or Asian. Have you seen any American investors in the resort areas of Japan?
Okay, thank you very much. Yes, exactly. The investor from Asia or the Australia, they are looking for the destinations like Niseko, Hakuba, Okinawa, because Japan is the covered by 64, more than 64% its mountains, and also surrounded by oceans. So many resorts there. They are looking for the destination and they invest, but there is a one problem, that is the national regulation. National regulation try to save the earth's nature, so it's very tough to build up new one. So they are facing that problem, I guess. But for the investor from United States, they are, yes, they are also the same as them, looking for the destination. Yes, but one more thing, they are very, I think, smart. In Japan, the owner, management company, I mean the receipt, and also the brand, it's not the different. Normally, it's combined one companies. It's really common in Japan. And the investor from United States, they are looking the business model. If they separated, owners separated, and they bought the investment bought the property and invest to the property, and they are looking for the lessee. I mean the management company, and they really know the hotel brands. So they changed the hotel model to our ryokan included, changed that model to the sandwich lease model, like the owner, management company, the brands, completely separate. Then they try to value up, try to do value up. That's a really good, smart way to do it. Yeah, that's my answer.
Thank you. Here, I would like to ask you to make some closing remarks, and then I will give a brief preview of what's coming up next in this series.
All right. As I mentioned at the beginning of the recorded presentation, Asian Pacific chapter of series is still very small. We only have 14 members in the chapter. 12 members are in Japan, one in Korea, South Korea, and one in Taiwan. But we are expecting to expand the number of the members, although we are not, we cannot expect to grow rapidly, but we are going to expand gradually. So I just like you to let us know if you know somebody in our region who might be interested in joining the series. And also, based on today's presentation, if you do have some question and interest regarding the Japanese real estate market, we are here in Japan, so please contact some of the series members here in Tokyo, including Takeshi and Tsushi and Hideaki, who couldn't make it today. So please contact us if you need. No?
Thank you, Hiroyuki-san, Yasushi-san, and Takeshi-san, and thanks to Suzuki-san for joining us in the pre-recorded session. The market dynamics of Japan represent not only recovery, but resilience, both of which are recognized by investors. They may also represent a preview of the challenges that will be felt soon in the rest of the world. We also want to thank the team that makes this international collaboration possible. Larissa Phillips, Cassandra Curiel, RJ Sirois in Chicago, and Mariko Uchiyama in Tokyo worked together to coordinate time zones, video formats, and questions to put this together. And a thank you to the Counselors of Real Estate Foundation, which gave a grant to help with the costs of bringing these sessions together. Look for details soon on upcoming What's Next sessions, including several more sessions addressing Asia-Pacific markets from your new growing Asia-Pacific chapter. And with that, until next time, on behalf of the Counselors of Real Estate, thank you for attending this session of What's Next for Real Estate and the Life Experience. Good night and good morning.